someone who never seems to age. That is Jeff Royle. Welcome, Jeff.
You say the nicest things, and Happy New Year to you too.
We thought we would do this. Thank you. We thought we'd do this live early in January because it is a time that people have actually got to actually spend thinking about what is ahead in 2023. You know, Christmas is done, New Year's done. The only thing we've got to worry about if you're in Northern Auckland, Waikato Bay of Plenty, is of course the weather bomb,
Yep.
which from an Auckland perspective doesn't look like it's doing much. But if you are watching our live and you have any questions to our topic today, what is a financial sticking plaster? We're going to tell you about those 5 things that we're going to talk about. And those are bad credit, arrears, bankruptcy, no asset procedure. That's what I want to know about, and IRD debt. Everyone knows about IRD debt. And if you have any of those, what is the solution that Jeff Royle has for you if you are thinking of getting a mortgage to if you have any of those concerns? As I said, if you have any questions in any of the channels that we are watching today, please comment below, and we will dive into. Jeff will come back to you with answers to your questions. Before we do that, Jeff Royle, what is your prediction on 2023?
Good question. 2023, I think, will be a year of 2 halves. I think the first half we will see more of the fallout from 22. As we get to mid-year, I think the country will know where it's going politically. I think the country will know where it is economically, and therefore, as we go into the second part of the year, I think we'll see an improvement, certainly in the housing market, and therefore, obviously, the lending market. And correct me in 12 months' time, but I think this time in 12 months' time, we'll be in a much better space than we are now.
Excellent. And that is saying that there's going to be an early election or a Q4 election. What do you reckon?
Well, I don't think we'll see an early election. I think the country's ready for a change, and change is always good. And in our market, which is obviously the lending market, the last couple of years have been pretty harsh. There's been a whole raft of fairly anti homeowner investor type legislation and rhetoric that hopefully will come to an end, and we can get back to some kind of normality.
Excellent. So if your world doesn't have that word like normality, because you have some bad credit, that is our first of 5 scenarios that people face, that you see from the people who come through iLender with some of these challenges. What would be your solution if people have bad credit, Jeff?
Okay, so bad credit can affect a wide range of people. So a few years ago, it used to be frowned upon. Now it's sort of almost, it's part of your life. Credit referencing agencies are far more sophisticated now than they ever have been. Stuff does get forgotten. And so it generally only bites you when it bites you. So if you're not looking for a mortgage, or you're not looking to finance something, and you've got something on the credit file, it's probably not going to affect you that much. Where it does affect you is, just trying to think of a good example. So here we go. Youngish couple a few months ago went to the bank, and they were amazed when the bank said, "Sorry, no, you've got a fairly significant default against your name relating to a power bill." And the couple sort of looked at each other and it's like, well, I don't really understand what that's about. Anyway, it transpires that the girl had been flatting a few years ago, and then obviously that arrangement changed. Her name was on the utility bills. Everybody messed off and did their own things, and she did her own thing, and it sort of got forgotten about. Utility companies and credit card companies and similar tend to have very long memories. So that was a pretty large black mark on the file. She paid it immediately, but that doesn't make it go away. So a default or a collection is normally on your credit file for up to 5 years, paid or not. So in that scenario, it was a fairly high loan to value application. They were on really good incomes. So we sourced the loan through one of our non-bank lender partners, and they were absolutely ecstatic that they got where they wanted to be. And the plan for that one, from memory, was the default would fall off after 2 years. So another 2 years, at which time we can look at refinancing to a trading bank. So hence the title, sticking plaster, financial sticking plaster. We solved a problem fairly short term, got them into where they wanted to be, which is their own home, with an idea that we'll get them to a bank, fairly soon.
There is always a way out of the mire.
There is. And our favourite saying in our office is, all you need to do is ask.
All you need to do is ask.
Yep.
I'm asking you, point number 2, what if you have arrears, Jeff Royle? What if you have arrears? What is your solution to get out of the mire?
Okay, so arrears. So if we confine this to financial arrears, so you're in arrears with your mortgage. So let's say your mortgage is with a bank, and for whatever reason, it's in arrears. So we need to understand why. So was it loss of income? Was it due to redundancy? Was it due to illness? Over the years, I've come across some quite interesting explanations for arrears, and I'm sure in the minds of some people they're perfectly valid. In the minds of the financial institutions, they probably weren't. So I think the first thing to do is not panic. It's recognise that maybe you've got a bit of a situation, and then look at the remedies that are available. So if you're with a bank and you know that you're going to be into trouble, then the first thing to do is contact the bank. Sticking your head in the sand is not an option. Banks have huge resources, and they will follow up. If that doesn't really work, or you feel uncomfortable, then seek out an advisor who understands these things. So whether it be ourselves or another advisor, the important thing is to do something about it before it gets to the point where it's irretrievable. So there are generally options open. It may well be just a simple restructure with the existing lender. So that may be a change from principal interest to interest only. Last resort with a bank might be what was laughingly called a payment holiday. I certainly don't recommend those if it can be avoided, because all you're doing is piling onto the debt, and then you pay interest on interest. But hey, sometimes that's what's needed. Or if there are multiple debts, so it could well be that somebody's got a mortgage and they've got 3 other loans, and it's just the weight of those loans is dragging them down. We may be able to refinance to a lender, maybe short term, on an interest only basis. So it just consolidates everything into one payment that becomes affordable, maybe for 6 months, 9 months, 12 months, and then again review. The problem hopefully would have gone away. Maybe a new job, maybe increased income, or whatever the issue was. And again, goes back to sticking plaster. It's fixing an issue, a short-term issue, in order to get people on their way.
And of course, you can email help@ilender.co.nz. Isn't that right? Is it help@ilender?
It is. It is, yes. And help is exactly what we do.
Absolutely. The third point of our 5 start of 2023 challenges that you might be facing is the prospect of bankruptcy, or I'll let you walk through what that premise might be. You've just coming out of bankruptcy. What would be your solution there?
Yeah. So unfortunately, bankruptcy is a fact of life. I think we're going to see quite a lot of it in the first 6 months of 23. I can't really guide people as to that process, because it is so different, but it's the same as if you get into arrears. If you feel that the whole pressure is just going to get too much, don't stick your head in the sand. Go and seek out a professional who will guide you through the whole process. But let's say that's all taken place, and you were bankrupted, I don't know, 2019, and you were discharged, say, after 3 years. So your discharge was 2022, and you've come out. It hurts. You've dressed yourself down. It's never a pleasant experience. I think my comment there would be you're not alone, and far from it. So what do you do? So you go to the bank for a mortgage, and they will turn around and say, "Sorry, mate, just no way, Jose. I don't care if you've got a 50% deposit. We cannot lend to you." So bankruptcies tend to stay on your credit file for around 7 years. I have seen it longer, but average is around 7 years. So as long as you're discharged, that's the key. As long as you're discharged, there are multiple lenders out there who will lend. Yes, you'll pay a premium on the interest rate, not as much as it used to be. I remember 10 years ago, if you were discharged, you were probably looking at 2 to 3% more on the interest rate over a bank. Those days have gone. Depending on loan to value, depending on the situation, at the moment I'm seeing it less than 1% over a bank. So again, it's just making sure you ask the question, looking at the solution. If the solution doesn't work for you, hey, that doesn't matter. What does matter is you can then make an informed decision based on fact and not hearsay. Or your mate had a mortgage 10 years ago and he got ripped and all that kind of stuff. Those days have long gone. So bankruptcy hurts. When you come out of it, there are options, and that's the key here.
Excellent. I'm liking the sound of that, because I was always a worry, I might have carried a little bit of debt, and it's always a worry, but it's just so reassuring hearing, because I'm sure it's something that's quite common that people come to you, and that's really quite reassuring to hear those sort of words. The fourth one we're looking for is no asset procedure. What does that mean?
No asset procedure is basically a milder form of bankruptcy. So it's somebody's got themselves way in over their heads. They actually don't own anything. So the money they borrowed has been frittered on, I don't know, holidays. And I say frittered maybe a bit flippantly, because quite often the money's been borrowed maybe to help out a relative. This sort of links into guarantors. I mean, I see a lot of people who have gone guarantor to their aunt or their cousin, best intentions, but that person has then left the country, leaving the person who's acted as guarantor, and that's what it means. And you are now 100% liable for a debt. You haven't got the money, you haven't got the assets, and you're in trouble. So again, I can't advise on the actual process here, but it is the same as bankruptcy. It's seek out a professional and follow the process. And then afterwards, it's the same as the bankruptcy side. It's as long as you're free and clear, or if you're in a payment plan, because that sometimes happens. A lender may look at the payment plan and then add it into their servicing calculator and basically treat it as a loan. So if your payment plan is like $500 a month, they'll factor that into the overall servicing calculator and then determine whether or not that's a viable risk or not. It certainly won't be a bank, mainly because most of the ones I see involve a bank. So if somebody, and this is the bank's attitude, this isn't mine, but the bank's attitude is, if you can't manage a $10,000 debt, how on earth can you then be responsible for a $500,000 debt, which makes sense. So again, can be done. It varies in terms of interest rate, the same as bankruptcy, but it's not a showstopper. The wheels can turn, maybe a bit more slowly, but they can turn and get you into a property, which gives you the security. And owning a home is not all about money, is it? It's about stability, security, You can do what you like in your own home, pretty much. You can create your life around your home. So it's not just about dollars and cents. It's actually a much bigger picture.
Got it. Before we get into the last point in our 5 challenges that people might be facing at the start of 2023, if you have any questions and you would like those questions answered by Jeff and the iLender team, you can either email help@ilender.co.nz or comment below, and Jeff will come back to you. A very common one that we seem to see a lot in the news, in the press, is IRD debt. Everyone seems to have IRD debt. What is the solution that you would suggest to people, and maybe an example? I'm sure would this be one of the most common challenges that people face?
It is, and I had some figures at the beginning of December which were pretty mind blowing. So apparently, at this time of year, it's not unusual for the total debt to the IRD. So this is overdue tax. This isn't stuff that normally gets paid. This is stuff that's overdue. Sits at around $1 billion, and that's a mix of time of year, missed payment dates, stuff like that. So it's not quite as bad as it sounds. Today, that has gone to $4 billion.
Wow!
Now that's huge. So have we seen a rise in people seeking help for IRD debt? Yeah, for sure we have. And an example, very recently, a guy earns serious money. He's probably earning well over $500,000 a year. He's in the IT industry, employs heaps of people. One of the businesses failed. I'm not quite sure why. I don't really need to know why. And he ended up with 160 grand debt. He then, I guess, like a lot of people, buried his head in the sand. The debt increased, fees and charges and excesses and everything else. So when he came to us, which is probably about 4 or 5 months ago now, the debt was sitting at $240,000. Plenty of equity in his house, but of course you go to a bank and you mention IRD debt, and if it's historic, so in other words outside of the current tax year, they're just not going to help. So we completely restructured his lending. That went over the line actually the Friday before Christmas, so it was a good Christmas present for him. And that's now gone. The other good part about that is, through an accountant contact of ours, we managed to negotiate the IRD debt down to $140,000, as long as it was repaid within 7 days. So really good outcome. He hasn't lost his home, he hasn't lost his business, and for sure he's not alone.
And it sounds like you've mentioned it really. In all, maybe 3 of the 5 things, don't bury your head in the sand, right? It's you just saw that he $160,000 swelled out in penalties and overdues to 240, and it's just a talk to somebody, right?
It very much is that. I remember when I came to New Zealand in 2006. I was actually genuinely shocked at the financial illiteracy that I came across in New Zealand. In that, if something went wrong, and I am talking only financially here, something went wrong, it was normal just to stick your head in the sand and hope it goes away. And maybe sometimes it does, or did. But in those days, the credit reference agencies and their users, i.e. financial institutions, was very basic. Now it's actually very sophisticated. So stuff doesn't go away. So it's really important to nip it in the bud, control it. And if it gets too much, seek advice. Citizens Advice Bureau are brilliant. They will always have a team of professionals willing to help out, give them some guidance. It is also about taking personal responsibility, own the issue, write it down. What can you afford? Be realistic. I think if there's one piece of advice, it's certainly from unsecured lending is don't try and borrow your way out of it where you're paying 20-30% interest rates. I mean that's just not going to work. But it's sitting down. It's sitting down, being rational, putting a plan together and sticking to it. And 99 times out of 100, you will come out the other end okay. Maybe a bit bruised, but okay.
So if you are sitting here at the start of 2023 and you have those things we just mentioned, bad credit, arrears, bankruptcy, no asset procedure, or IRD debt, and you still want to own the Kiwi dream and have a mortgage, then talk to the team at Islander. Jeff and the rest of the team, help at islander.co.nz. Jeff, what have you got planned for the rest of January?
Oh, lots of plans actually. So we've got some new product launches underway. So the great thing about the non-bank or alternative lending sector is it can be flexible very quickly. So there's some new products coming up, which will be pretty good. As a brand, we are very much on the acquisition trail. So we are expanding the business, which has been quite a way in the making. So we will have mini islanders, if you like, across the country. Yay! And for me, a bit more time on the water. Coast Guard takes up quite a lot of my time. It's my sort of release. It's my way of putting back into New Zealand. I have a thoroughly good time doing it, and we're doing good stuff too. And maybe a spot of fishing. Who knows?
Just hopefully you're not rescuing people off the rocks who are doing the fishing and you can steal their fish.
It's funny. Yes, the other day we did actually take some people off rocks who were fishing, and no, we didn't steal their fish. They very kindly offered us some fish, and very gratefully I said thank you. And they were very safe and very happy to be on dry land, and it was a bit bouncy out there, but we all got home safe and sound, and so we did our good deed for the day.
More than just a financial sticking plaster is Jeff Royle. He is a paramedic on the water as well as in financial circles. You have a great rest of your Thursday, and we'll see you later in January.